I think when we look at the housing finance sector, there are multiple segments. There is an affordable segment, there is a prime segment, and there is a segment which is also for developers. So I think for each segment, the requirements of the customer or the gaps that exist in the market, are very distinct. When it comes to affordable housing finance, loan to value or higher loan amount is very, very crucial. When it comes to prime housing, it is about how you are delivering the product in the speed, at the right rate, and are you able to, provide the solution digitally, and from which brand it is coming also becomes extremely important. When it comes to developer finance, I think your ability to understand the developer's requirement and then serve the requirement meaningfully in the appropriate time, I think is so crucial. Looking at these three insights, I think what we have done at Aditya Birla Housing Finance is, create a platform which is called Finverse, which allows the customer right from prospecting to disbursement to stay on one single platform, which basically means that there is complete democratization of information. So our partners, our employees, our customers, all are there on the platform. The anxiety of the customer when you avail of a housing loan is that, where are you in this stage? Because there is already an anxiety that he is dealing with on property. He does not want to have an anxiety when it comes to taking the home loan. So what we've tried to create is a happy home loan journey through Finverse, where at all points of time, the customer exactly knows where is he in the stage. So there's a My Track section that we have created, which allows the customer, just like a passport application, to know at which stage is he or she, on his home loan journey. The other thing that we have done on innovation is make sure that there are product propositions which suit a particular segment, and our offering becomes really n is equal to 1. For example, for young salaried individuals, there's something that we've created which is called a step up. So in your initial phase of your career, maybe your incomes are not as high, but you are knowing that if a particular individual is working in a XYZ company, the growth rate of the income is quite anticipated. So you could structure the EMIs in a way that there's a step up that gets created and a larger property gets kind of purchased. When it comes to loan against property, not necessarily the income documents may completely reflect the income of the individual, and there is a storyboard way of understanding the income, where some proportion of the income can be understood through storyboard and the balance can be understood through documentation. So the product propositions that we have created rendered through the Finverse platform, for us is really capturing the customers mind share, and that is why the growth is coming very, very well for us, backed of course with strong analytical models both on structured and on also semi-structured information. Affordable housing finance, like you would know, I think really accelerated during the time the first PMAY was launched, and you had 3 crore housing homes getting created in India in the last 8 years between FY15 to FY23. Unfortunately, I think for the last couple of years the growth has been a bit muted, because there has been multiple factors. It could be also interest rates. It also could be demand not coming up quite well. But I think with the new scheme which the government has launched very recently, and all of us were there in a MOU signing ceremony which was organized by the government, the new scheme is again coming in, which will also enable our customers a benefit of 1,80,000 over the period of 5 years for a housing loan. I think this scheme is certainly going to provide impetus. The other thing which is coming up is that if you look at tier 2, tier 3 cities, and a very good indicator of how growth is coming up is also how people are investing. So just to give a data point, India, I think between April to August, 2 crore new folios were created for investments. And if you see those and from where it is coming, 50% of that actually is coming from the B30 markets, which are the smaller cities. So that actually is showing you that there is some kind of momentum that is getting built up. So I think housing finance companies like us, if you're going to be present in these markets, if you're going to create propositions which are which can be delivered meaningfully, and more importantly, I think awareness and education in this segment also is so critical, because the customer really doesn't know whether he will be able to get a housing loan. So I think awareness, education in the language which he or she understands, I think is so important, and making sure we use AI to our best abilities to reach more number of people, to educate our teams to engage with the customers more meaningfully, is going to certainly help in driving up the growth of the affordable housing finance segment. I think before I answer that, we continuously keep inciting from our customers as to what is the insight which the customers are bringing up today. And there are 5 important things which customers are telling you today. First, they want to deal with a trustworthy financial services partner amongst the plethora of providers that are there. That's coming up first. Second is, in the crowded marketplace that currently is, they're really looking forward to simplicity. They're looking for simplicity, as a very important virtue. Third, I think the verdict is not clear whether they want to deal with you digitally, or they want you to deal, they want you to be there present physically. So I think the verdict is clear that you have to be omni-channel. Fourth, I think, is width of services that you provide, as a platform. Today, real estate, just the way real estate is, similarly, our mobile is also real estate. So people don't want to have multiple applications for, multiple financial services or products that, are coming in. And the last I would say is, apart from buying and selling, customers also want, to advise you on what he or she, must do, not at the time of sale, but before sales. So I think these are the five important insights, that, we could capture. And, converting these insights into propositions, I think, and to your question of, what NBFCs should do in the next gen, I think one of the most important things is to create, platforms that will allow us to directly digitally acquire customers at scale. I think at Aditya Birla, we created Aditya Birla Capital Digital, ABCD. And, simplicity is an important peg that we picked up. And therefore, we called it ABCD because everything finance made as simple as ABCD is the tagline. We launched it, in the month of April this year. And with this simplicity virtue, we have seen, customers really, going for it. We already have 3 million customers, who have already come on the platform and are engaging with us very, very meaningfully. So I think creation of digitally native products, I think, is going to be one critical differentiator, for the NBFCs and HFCs. Second, I think leveraging ecosystems in a very meaningful way, because when customers are engaging with you today, it's not only about financial services. The more and more you understand the overall need of that particular segment, and if you're able to serve it, very, very seamlessly on that platform, I think you're going to get, better, gains. In that regard, I think, as a NBFC, we created Udyog Plus, which addresses the MSME segment of India. So apart from providing traditional lending propositions on that platform, all the other important needs like tax filing, like, generation of, accounts, payrolls, all these services are provided on the platform, and, the customer can seamlessly, avail of this. So leveraging ecosystems is second. I think third is NBFCs are dependent, obviously, on liability and liabilities which are low cost, high volume, and less volatile. I think all of us, to remain resilient, we have to focus on a liability base which serves, all these three, features. I think so. We'll have to be, at it, in terms of generating such kind of liabilities. And markets are opening up. There are, lines that are available internationally as well. There is NHB, for example, which also, provides, financing to you. And securitization is also going to emerge in India. Today versus developed countries, our proportion of what we are securitizing is very, very low. Although it's about 1.8 lakh crores for FY24, but that number, really does not, compare well with, other developed countries. So resilience on quality liability is going to be the third, important pillar. And last but not the least, I think staying ahead of the curve, both in terms of compliance and regulation, because, really the arbitrage between an NBFC or banks that, used to earlier exist, I don't think the arbitrage really exists. So, everything is converging there. So staying ahead of the curve, investing in compliance, and most importantly, focusing on risks that are emanating for information, from information security and also from digital frauds. I think, we really need to invest to make sure that those risks are mitigated. So I think in summary, this is what we will need to do. And last but not the least, people, because, a NBFC, differentiates really itself with talent and technology, and also the brand that you are representing. So I think, consistently investing in people, ensuring that they are, up the curve and the capability is constantly built so that the interactions become more and more meaningful and they win in the marketplace is what I think we'll have to invest in to make ourselves more and more sustainable.